We were number one on Binance single account wise 2021, 2022, and 2024. Last year we were on Binance top one on P&L again.
In this exclusive episode, Ankit hosts Jimmy, the visionary founder of Coincall, one of crypto's hottest options exchanges, with special guests Jeremy and Junny bringing the heat.
I love trading. I enjoy trading for like many years. I made a lot of mistakes, success as well. So it's just been fascinating.
Even in a boring market or like a bear market or so, or in a range market, you can still generate money by trading options.
While Deribit still rules Bitcoin and Ethereum options, Coincall quietly becoming the undisputed king of options for old coins.
And the beauty of option is that there is a way to express a view and to generate return whatever the market you're in.
In 2026, crypto options market represents only 2% of total crypto volume, while traditional US equity options represent nearly 50% of underlying stock volume.
A couple of years later, you're looking at probably 10%-ish. So that's another 3 to 4x.
Supported by Kaspa Finance, the first V3 DeFi protocol on Kaspa. Igra Labs, atomic programmability on a Kaspa block DAG. Cascade, use your Kaspa without selling it.
Looking forward to our chat focused on crypto option, Coincall, and derivative market, right? But let me start with some facts. Before starting Coincall, you manage a crypto trading desk, right? Called Big Capital Candle, and topped Binance P&L. That's crazy and amazing. Jimmy, how long did you manage the title for?
So we have a CIO managing that right now, but I've been managing all the way since 2019, I would say. So we didn't really name the fund until like 2021, but the fund was there starting 2019. We started with a bunch of trading strategies, delta neutral ones, also riskier ones, but yeah, it's been pretty fun.
So when did you start it, and how long you ran it for?
Well, so it's still running right now. Just we have a new CIO running that. Yeah, we have a new CIO running that. I think last year we were on Binance top one on P&L again.
That's
So
amazing.
we were number one on Binance single account wise in 2021, 2022, and 2024. So I was 2025. Sorry, yeah. So that's pretty decent. But yeah, it's we have a bunch of strategies. The account people are seeing on Twitter, I think that's running a riskier one, a more risky one. But yeah, but we also run like delta neutral strategies. Yeah.
Right. So how do you manage, I guess, before I get to Jeremy, how do you manage still running the fund and then obviously now starting Coincall? Because you started Coincall in 2023, right?
Yeah. Well, I don't think there's any conflict, right? I think it's well, for as of now, like I personally I don't spend too much time on the phone, but it's just like something that really interests me, like trading in general, right? Like I love trading. I enjoy trading for like many years. Made a lot of mistakes, success as well. So it's just been fascinating. I think Coincall like is trading oriented as well. We want to build an infrastructure for people to come here to trade. So it's all like kind of connected. Yeah.
Right. So what I guess, I definitely want to get into Coincall and obviously get into all the things you guys are doing. But what led to, why did you start Coincall? And obviously that's where Jeremy comes in. What was the reason for starting Coincall? We had some options exchanges at that time, right? Deribit would have been one of the ones.
Yeah. Well, I think, so Deribit is great, to be honest. Like they were acquired by Coinbase. They started super early back in 2018 when like literally like probably like less than 10 people were trading crypto options on Earth, right?
Options, yeah. That's 2018, yeah.
Yeah, but
Yeah.
but the product hasn't been. I mean, I don't think they've been updating the product. I know they've done a lot of work in terms of infrastructure, but like even until now, it's still like Bitcoin denominated, Ethereum denominated. A lot of like UI UX or interactions. I think they're kind of I want to pick the right word, but I think they're slightly outdated. Okay, so like there are a lot of improvements can be made in terms of user experience. Um, and I think from many perspectives that if you look at crypto, DEX or CEX, putting that aside, like if you look at the products you can trade, you have like linear product, you have like options. On the linear side, I think it's a very competitive and a pretty, in my opinion, pretty boring market because you're just building the exact same thing that people have built, right? But I think on the option side, there's still a lot of interesting things you can do that people are already paying too much attention to. So that's how we got started.
Beautiful. Can I ask you to quickly explain linear side of things? Because I know this is obviously
Just like spot and perp, right? I think that's like linear type of like trades. Options, it's not. Yeah. So
yeah. Thank you. I think we tried to educate listeners along the way. And just quickly, so what were you doing before these things? Before, obviously, no one just came and gave you $300 million. Were you part of Citadel? Or
yeah, so I was in the US all the way until like 2017-ish. Before that, I was doing a tech startup. I came from a CS background. So I sold my company back in 2015. I got into crypto actually. It wasn't an industry, more like an investor back in 2013. So we were able to, buy some pretty cheap Bitcoin and Ethereum. That was lucky, but yeah.
I see. So you were early investor, and then some stage you decided to get into the option trading in general. Yeah, crypto trading.
Yeah, because like, well, back in like 2012, 2013, like, I mean, you can trade, but the market is the
Yeah,
market
well, where did you trade? Yeah,
is like it's like up and down 50% in like a day. So like it's pretty hard, right? So you're pretty much buying some really early stage crazy computer coin that everybody thinks is trash, and you just kind of like believe in that and hold. Obviously, right now it's not that stage anymore. Like you can't. Back then, if you're telling people that the president of the U.S. is going to be supportive of this, nobody's going to believe in this, right? So it's just completely different stage now.
yeah, I see. Awesome. All right, thank you for sharing a little bit of background and story. Jeremy, can we jump on your side, please? Because I got to know a little bit of your background before this recording, but love to share with the with the audience your background and when you joined Coincall.
Yeah, hello guys. Hi. Yeah, thank you very much for having me here. It is very much of a pleasure, first of all. Very short background on my side. So I started my career in TradeFi back then, about 10 years ago now. Was doing some equity derivatives and exotic products. And then I joined crypto and mostly specialized in crypto options and derivatives for the last 5 years now. So yeah, as I said before the recording, for me, it's just great, to see successful entrepreneurs focusing on the crypto option market. I think it offers quite a lot of opportunities. And that's the reason why, like in the last few months, I started to join Jimmy and try to help him build his product and capabilities. So yeah, that's a long story short about myself. So I think, many opportunities in the option market right now, as Jimmy said. So yeah, quite excited to discuss this and dig a bit further in that.
Beautiful. Just quickly explain to the audience what exotic product means.
Yeah. So yeah, in options you have vanilla instruments. So yeah, if we take a step back, so you have linear instruments, so delta one instruments, which are like spot and perpetuals, which means that the payoff is linear, right?
Yeah.
Then you have option instruments. You have vanilla option instruments. Instruments become non-linear, so you can have a non-linear type of payoff. And then you can have exotic, right? So on top of that, not only it's non-linear, but you can add barriers as well. You can add barriers, you can add a certain number of stuff that makes the payoff very much tailor-made to your view through options and through what we are calling exotic options. So exotic options are actually just a type, an enhanced version of vanilla options.
I see. So would you consider swaps like types of exotic options?
No, it's just a derivative swap. Yeah, like exotic options are really options that have a barrier component. So for example, I am buying a call options, right? And that there is a knockout barrier at some point, which means what is a knockout barrier is a level at which my option is going to stop existing. It's going to kill my option, right? Or you can have as well a knock-in barrier. So there is a level at which my option will start existing. And basically I spent the first few years of my life pricing such type of instruments.
Right, that's beautiful. I'm sure you have so much to share with us, and obviously it's all new for crypto market, right? Junie, anything you would like to add here? I want to give you a slot as well.
No worries, no worries. Again, like you can talk to, but yeah, I do have one little question. I think before, like maybe like a year ago, these questions won't exist. But look, how would you compare an option trading product to a perp futures? And now you see there's a lot of perp decks, right? Why still people want to trade options? Because I think there's one weird thing about crypto market is that they have this perp futures. Usually the futures have expiry dates, and now they have perp futures. And then perp futures exist not only on centralized exchanges but also on DEXs and on chain as well. And now there's a popularity of Hyperliquid and then on Aster. Why people still want to trade options on Coincall when they have this perp DEXs? Quite similar to common users as a product.
Yeah, I can dig a little bit in this. Yeah, I think like the crypto market has been driven mostly by retails and crypto native firms before that wanted to access leverage. And for that purpose, I think perps are a great instrument, right? So you just want to access leverage. Perps are really easy to understand and so on and so forth. I think options offer kind of very much of a more diversified range of use cases and payoff. So people are using options for hedging with predictability, right? You can as well use perps for hedging, but then you have a constantly moving funding rates that rather than, in an option where you just pay a premium at inception and then you know exactly the insurance that you paid for your hedging for like in 6 months or 12 months or so. So I think it offers more like predictability and as well much more flexibility and different type of bespoke payoffs. So when you look at TradeFi, people are using options for hedging. People are using options for, like entering into different type of risks, playing correlation in between assets, playing dispersions in between assets, and so on and so forth. So long as much as you have like that different type of players entering the market and more sort of sophisticated strategies being deployed, I think options are going to become more and more important. So I don't think that perps are enough for this market to actually scale and grow beyond crypto native.
Yeah. Does that answer your question, Junie?
Yeah, sounds good so far. Well, I will do a follow up later, but yeah, that sounds good.
Yeah, I wanna quickly add an example here, right? I think so like last night I was talking to somebody, like it's like I understand like most of the audience of her podcast, like they may not know very well about options. So like don't have to get too technical here, but like I think aside from the institutional use, one of my friends, so he's holding a lot of BTC and ETH right now, and he's slightly worried about some systematic risk that obviously the market is pretty volatile right now. But he's reluctant to sell, right? So, and he wants to know like if he, wants to kind of, pay a few percent of, if his portfolio to buy insurance for the next, say, month or two, in case there's a big crash or whatever, just in case. What should he do, right? Like I think for things like that is, options is great. Like you can buy, for example, like a pretty, say like a 65K or whatever Bitcoin put expiring in like I don't know, like March, April, something like that, and you pay like a few percent of what your current portfolio has. You don't have to sell a portfolio. If price goes up, that's great. Like you can probably make that money back in like a day, right? If it goes down, then you're protected, right? Like I don't think you can easily do that with perp and stuff like that. So like yeah, it definitely has its own unique use case. A lot of other use cases, but I guess I think this is a very very, very simple one.
Just quickly adding on to that actually question. Do you think we will have VIX? We don't have VIX in crypto, do we?
I think we do. I think Deribit tried to launch. They did launch a vol index a couple of years ago. I think so far there's not been that much interest, that much demand for such instrument. But yeah, nonetheless, I think that is maybe where the market is going to evolve in the future for sure.
Yeah, I think because typically for the big players, they'll hedge via VIXs, right? Like, of course, I think the example Jimmy gave is a beautiful one for a whale. But I think, yeah, if you're a massive institution, you might want to use a different instrument altogether. But guys, thank you for that. I want to pull back a little bit, though. I want to pull back. So, Jimmy, over to you, right? So you started Coincall, right? Coincall started in 2023. You guys worked on it over a year or so. And now where you guys sitting, like according to my numbers, right? It's got around 10% of the crypto options market, right? That's a huge growth in last 2 years or so. So perhaps wanted to ask you, what's really driving this growth? What you have seen? These are impressive numbers, right? You're talking huge numbers here.
Well, I think generally speaking, you still don't have a lot of players in the crypto options market right now. Like most of them are institutions. You're starting to see more and more retail users talking about them on Twitter. So I think generally speaking, it's a growing market. You start to see more funds trading crypto options that were focusing on, Delta One strategies like spot and perps in the past. Now they're kind of like working on option strategies because it's more profitable. So yeah, I think in short, I think this is a growing market, like as the sector itself, right? So that's probably what's most important. Yeah.
Right. And have you seen the market growth? Like, I don't know the actual numbers where the crypto option market compared to the perps and spot. Like, what are the numbers? Do you happen to know this?
It's definitely growing just because the base number is so small, so you don't make attention from that. Like a few years ago, it's probably like less than 0.1% of everything, right? Now you're looking at 2 to 3%. So like, look, 2 to 3% is a small number, but versus like 3-4 years ago, that's a 20-30x, right? So
That is huge, yeah.
so like it's growing, but just as I said, I think you're gonna see that number slowly growing up, but because the base number was so small, so it's not like overnight you're seeing like 20% of people are trading crypto options. And I also think it depends on like what kind of product you're building for your users, right? Like ideally you want to simplify the product, you want to make it more approachable for everybody. So that's also what I think everybody is doing right now. But yeah, generally speaking, I think even from the institutional side, especially smaller people trading options, just because the whole decay of the return on the curve on the spot side is very crazy, right? Like I'll tell you, like if you just run like a very simple funding rate arbitrage strategy back in 2021, like a super simple one you can write over like a weekend, you can probably make like 80%, 100%, almost risk-free return back in 2021, right? How's that number looking like today? Like a very simple IFR strategy gives you like less than interest rate, right? 3-4%. A complicated one give 10%, like 10 to 15% return over the last year. You're beating like most of the shops, right? Like, I'm talking about like delta neutral strategies, like without risk exposure. So that's like how crazy the decay has been. Really like diminishing return because everybody's competing here. But if you look at options, it's obviously a lot less competitive. I think that's why you're seeing more shops are getting getting more interested into this. Yeah.
Right. And why do you think it became so competitive? Like, since 2020, 21 would have been like the peak of, altcoins, and there was the last big cycle.
If there's profit, it becomes competitive.
I see. Right.
You're anybody like looking at a market that gives you 100% year-over-year return without risk exposure. What do you think, man?
Yeah. I meant it wasn't driven by retail, right? Like it's driven by institution jumping in.
Well, look, it's about retail as well. I think this cycle we like to compare that with 2019 because you're expanding under a quantitative tightening market. So you're not seeing a crazy amount of like hype from retail users, and also because of obviously there's a lot of different attention from different perspectives. But I think, in my opinion, the most important part is still macro, which is a quantitative tightening environment. Even right now, I would say it's modestly restrictive. You're definitely not at a very low interest rate level yet. So you're not going to see the retail hype, the craziness, and all the type of stuff you were seeing back in 2021. Doesn't mean it's not going to return in the future, but that explains why you're not seeing that in the last couple of years. But even putting that aside, I think just the competition alone kind of killed the return, right?
Right. Yes.
Yeah, right. Like if
Yeah, of course, it makes sense. Yeah. I mean, you touch upon so many different things, and it's beautiful. Let's unpack a little bit. When you started, right? You focused on altcoins, right? So you know, Coincall today doesn't focus on BTC Ethereum, right? That's what I got to know. Correct me, obviously, if I'm wrong.
Well, so we still focus on BTC and ETH, right? Like that's still in terms of trading volume, is still the most popular one, just because the existing market. But I think for altcoins, yeah, I mean, you should definitely build something like that. Well, it's very simple, right? Like a lot of the major altcoins, they're trading at very decent volume, right? Like very decent volume. And if you look at their options, it's a disaster, right? Like there's no liquidity at all. Like people don't even know where to go to trade because it's not even supported. The only way you could trade altcoin options in the past is not to find a platform, is to find those OTC shops like by yourself. But how many individuals have, the capability of finding such shops? It's very hard. And the trades are very weird. Like you sign a DocuSign on Gmail, you wire money back and forth. It's very weird, right? There's not such platform. But if you look at, like, for example, if you want to trade like a smaller ticker on, like, I don't know, like Nasdaq, for example, right? Like you would actually find the options are very tradable. Like it's very liquid. You can do a lot of things, and I think that's quite useful for a lot of altcoin options as well. You can use that to, some people, they have unlocked tokens. Hedging that with perp can be highly risky. Okay, price could go up like 3x and liquidate you, and then go back down again within, like, I don't know, like 12 hours, right? Options, if you do that with options, together with your unlocking schedule, you're pretty safe, right? And there are obviously a bunch of other use cases you can generate return. It's pretty useful. Like, but it's not supported. It's not even mentioned anywhere. So somebody has to do it. It's us, or it could be anybody else. But I think 2 years later on, you look back, you're gonna see like altcoin options trading just as fine as people are trading, say, ETH options right now. I think that's reasonable, right?
Yeah. Compared to TradeFi, traditional finance, traditional finance option would be what, 40 to 50% of the trading volume, right? It's massive, right? And as you touched upon, like 2 years ago was 0.1% in crypto options, and now it's 2 to 3%. Why it's still? I think that's perhaps one of the questions Junny was asking earlier. Also, why is still
very straightforward right now? It's because of the perp market, right? Like if you look at TradeFi, if I'm trading a Robinhood, okay, like I want aping GameStop a couple of years ago. What can I do, right? What could I do? There's not such leverage tool to offer you like 30x leverage on GameStop. The only thing you can do is to buy some, I don't know, like near-term calls that gives you the equivalent leverage, right? But it's not as straightforward as perp. So I don't think crypto options is going to be like 50% of the market, but I think from 5 to 15%, I think it's a very reasonable range. Just because the actual usefulness of options doesn't only come from the leverage itself.
Yeah. If I can quickly jump in here, I think it's also obvious that the market is sort of evolving right now. As I said before, like there is now a diversified range of new entrants in the market who have been driving a little bit up the option volume in the last 18 months. And I think, like the turning point has been the launch of the IBIT ETF, and together with the rise of the 80s, right? So I think those contributed to an increase in option interest. Of course, perps remain the star instrument in crypto, but now we are, like having option access not only for leverage, but as well, as I said before, for hedging perspectives, for yield generations, and I think more than that, I think there is still kind of a lot of relative growth incoming of options versus perps. And one of the reasons for that as well is that, large investment banks in the world, they are currently hiring and they are starting to package and selling structured products on IBIT options. So that correlates with the launch of the ETF. And I think, that this will naturally drive up the activity in crypto options and the inflow that will come in. So I think, like for me right now, the main question is how much of this growth will remain concentrated on TradeFi exchanges, by focusing on IBIT ETF options versus of how much of this will translate in volume growth into crypto native option exchanges. So in phase one, I don't know, but I think ultimately, one of the good things is that this will increase a lot, arbitrage opportunities between TradFi options and crypto native options. So yes, I don't see options going to 50% plus, similar to TradFi, but as Jimmy said, like I think there's still quite some growth in me now.
Yeah. Anything you want to add, Junny?
Yeah, sure. I think that we're speaking very fast and touch on a lot of concepts. I agree with what you say, and I want to go back to very simple stuff. And I think this might be kind of useful for the Kaspa community. So I think there's one very clear and simple argument that if you are having a large position, either you want to long, let's say Kaspa, either you want to long Kaspa or short Kaspa. And let's say if there is an exchange or there's a DEX exchange that offers you, let's say 100 leverage, right? 100 times leverage. It's not the case about, it's not the case that you will just say, hey, I have like $1 million and I'm going to bet all on this 100 leverage against Kaspa and that's my deal, right? In fact, you can do that on Bitcoin because, 1 million is not that much in the Bitcoin market. But in altcoins, when the market is way smaller, that you will get sniped and you will lose your position. So I think that's very important because Jimmy and Jeremy here are talking about the concept of hedge. And I believe that it's not that a universal concept everyone is familiar with, especially for the Kaspa community. Again, I'm not saying they're doing anything wrong, but look, sometimes they'll say, hey, if people are just shorting Kaspa, using a large leverage, actually that's not going to happen, right? And my question to Jimmy and Jeremy is that, look, let's slow down a little bit and let's say if we want to construct a strategy for trading Kaspa using Coincall option, right? And again, I can give some clues of what's going on in my mind. For instance, we can, let's say, have a delta neutral strategy, which is having, let's say, Vega arbitrage, right? Like I can try to monitor the IV surface on Coincall, and then if in some interval the IV is significantly higher than the history and the realized volume, so I'm going to short Vega this one or short Gamma this one, and I can have a delta hedge on the Binance futures trading and use Kraken spot because Kaspa's spot is on Kraken. I use a Kraken spot to check the actual price. Then my P&L source would be maybe collecting the theta or collecting the Vega when the IV falls down a little bit. Let's use this example, or what kind of strategy as Jimmy and Jeremy you guys will use if you you now have Kraken spot of Kaspa, you have Coincall option of Kaspa, and you also have Binance perps futures of Kaspa. Let's say if you want, up to your choice, if you want to long or short Kaspa, how would you construct a strategy and why this is a lot better than just betting, towards one direction or one trending thing hand using 100 leverage?
Yeah, so I don't know. I can quickly start here. I think it really, like depends on what the investor is trying to achieve. But let's assume that you're holding some certain amount of Kaspa in your portfolio and, like you're happy with the performance and you want to hedge it. I think, like one very, very easy use case is to buy put options, right? And I think why it's interesting is that, of course, you could be shorting perps, right? But the difference is that you cannot get liquidated. So, and I think that's something that people don't understand. So buying an option does not necessarily mean buying upside. You can buy downside as well, right? So long as you're long an option, you cannot get liquidated, right? So even if you want to access downside leverage, you can just do that by paying a premium that you know in advance. You buy a put option. So I think for your investors, whether they want a long or short, I would say buying option is the safest way. And a second thing that is interesting, still in the same topic, is that you don't have to pay the full price. Okay, so if you believe that Kaspa might go up 20%, but no more, you can just buy a call option and sell another call option. You can sell another call option 20% higher to reduce the premium that you will pay at inception, which is called buying call spread. So, of course, sorry for that. Sometimes we tend to be a bit fast and, explain concept that we are familiar with since now a decade. But I think, like if we want to talk to like some sort of entry new users into the option market. That's how I would define it. The safest way to do so for a new entrant is to buy options, which is much less risky. You cannot get liquidated, and you can optimize the price by not buying only an option, but selling other options on top of it in order to reduce the premium at the entry point of the trade. I think that is the main use case.
Yeah. Jimmy, anything you would like to add?
No, I think Jeremy answered that pretty well.
No, he did. And yeah, I think just it's obviously important for people in retail, I guess, to understand it, because again, this is my observation that up until 2021, retail didn't really play much in options, right? Even TradeFi. Like crypto is obviously new, but really that GME event, I think, really changed the ball game, and perhaps Robinhood and other trading platforms as they grew, obviously a lot more people have got involved. What do you think is going to drive the retail adoption of option on the crypto front?
Oh, sorry.
So what's gonna?
Go ahead.
So sorry, what's gonna drive the retail adoption on the crypto front, on the option side, you mean, or?
Yeah, on the options front, yeah, perps spot. I think we already got the volumes going, right? But I guess I just wanted to highlight that there was a trend that took place in traditional finance where retail came in. What do you think could drive that focus for crypto options?
Oh, I think one point I was mentioned before is that there is very much limited hedging in people's mind, I guess. And I think, after 1 or 2 cycles, people will start understanding the value of hedging your portfolio. Instead of living through 4 years of hell because your portfolio is down 90%. So I think, buying some put options also will become something that people are looking at or start looking at, I hope. That is one thing. And the second thing as well is that I think in the bull market, it's very fun to long perps and have crazy leverage because, you want to make it, you want to make money for sure. I think in a bear market or like in a very calm market, you usually see that volumes on spots and perps, they are dying. They are like much, much lower. Whereas you can actually still generate a lot of yields via options, right? And I think a market that is very, very big in TradeFi and that has not really penetrated yet crypto is structured product market. And I think like in a bear market, through structured products, what is a structured product? It's basically a combination of options, right? You can extract yield. So it does not matter if ETH or BTC are not moving anymore. BTC can stay at 70K forever. It's even better, right, for structured products. So you can just generate yield based on that. And I think, like if the market enters in such a phase, we were not that ready to distribute structured product in 2022, 2023. A few OTC desks would be doing this. I think Jimmy mentioned that before, like bilateral stuff. But I think now the market is mature enough to offer that at a much wider scale. So let's assume we have now 1 year, 2 years, 6 months, I don't know how long of bear market. I think, like structured products, which are like combination of options, might be much more popular and as well for retails that would drive retail access to options. That is my guess.
Right. Just quickly, Jeremy, if you want to explain perhaps what is the big difference between traditional options and now crypto options, because they are, even though the terminologies are same, but they're a little bit different, right? Like, well, quite a bit different. But how do you differentiate for someone who's coming from traditional option market to now crypto options market?
Yeah, I think there are like a few angles to your question now. So if you mean it in terms of payoff, it's exactly the same. I would say it's exactly the same, right? In terms of how they're constructed, obviously, like Deribit being the main option exchange out there, they built what we are calling inverse instrument, right? Which means that the option is denominated in the underlying currency. So BTC option will have as margin BTC, and ETH options will have as margin ETH, which is a bit different from traditional finance where usually options are mostly denominated in USD or whatever the currency of the country where the option is being traded, in euro if it's traded in the eurozone, and so on and so forth. So contracts or used to be a little bit different. I think Coincall does that differently in the sense that Coincall launched a USD and USDT margin, like dollar stablecoin margin options, which is a bit more closer to what traditional finance does. So I think the instrument per se is not that different, even though, it's not exactly the same at inception. And then, like in terms of use cases, I think we went through it before, but, like in TradeFi, there's a lot of different type of players using options for like hedging perspectives. Large buy-side institutions, they are like targeting very, very bespoke risk exposure through options, right? And ultra high net worth and, like all those type of players in TradeFi, they are as well buying a lot of structured products. Those are the three pillars in TradeFi. In crypto, it's been, very much limited to access to leverage still. So like until now, the few people that have been using options, I've been seeing them for the last 4 or 5 years, right? Or using options for access to leverage, right? So it's just like another way that you understand options. You don't want to get liquidated and you're buying out the money calls, you're buying out the money puts because you believe the market is going to go one direction or the other. I think that is one of the main difference I see.
Right. And I guess as far as I got to know, it's more of a European style settlement, right? Because obviously in the US settlement options, it'll be the underlying asset gets settled, right?
Yes, I think we are talking of a few things here. So a European option is an option that is exercisable only at expiry. Which means what is an option, right? So if you're buying a call option, you have a strike price, which is the exercise at which you can exercise the exercise price at which you can exercise your option. So let's say I'm buying an option with strike price $10 on an underlying, and then the spot price is $20 at expiry. The payoff is 20 minus 10, right? Only at expiry, I'm getting those $10. Before that, I cannot exercise. An American option is an option that you can exercise anytime during the lifetime of the option. So if the expiry is in 1 year, but like tomorrow the spot is at $20, I can already realize those $10. I can exercise it. That is the difference between European and American options. What you're saying as well is what type of settlement it is, right? So is the option settling in the underlying, or is the option settling in USD or USDT or any kind of dollar stables? That is. So on Deribit, like most of the options, they were like settled in the underlying asset, right? So that's what I mean before by inverse contract. So the real term here is inverse contract versus linear contract. So Deribit options were like inverse contracts where at expiry, you have your payoff, right? So if now you're buying a call option, BTC, 82K strike, and it's 92K at expiry in 6 months, then you're getting 10K equivalent, but in BTC term, right? You're not getting $10K dollars. You're getting BTC as a payment. That is an inverse contract. On Coincall, the difference is that you would get 10K USDC or USDT. You would get the stablecoin directly. So there's like European versus American, and as you said, that in crypto on exchanges, I think all of the options are European, so you can exercise them only at expiry, which does not mean that you cannot do anything before. There is a secondary market, right? But the price is going to be different. So that's European versus American, and physical versus and inverse versus linear. Is depends of if you're getting like USD or like if you're getting like BTC or ETH at expiry as a settlement currency.
Right. That's amazing. Thank you for clarifying. And just following that question, right? So one of the things perhaps I wanted to ask both of you, right? I was excited to ask you, why in crypto options we are seeing such a high IV, right? Implied volatility, right? Traditionally, you see, in the traditional finance, maybe 20 to 30, 40, 50%, right? At the highs of GameStop, you saw 150. But in traditionally in crypto options, the IV is always up to 150, right? Average would be 130, 150. Why is that IV so high?
IV is actually much lower on BTC. I think it's a function of liquidity. Yeah, I think it's a function of liquidity and how much is an underlying moving, like your pricing and expected move. So IV, for the ones who don't know what it is, it's implied volatility. So traders, market makers, they are pricing an expected move on BTC, right? And they are giving a value to that expected move. That is the implied volatility. I think the implied volatility on BTC is somewhere between 35 to 40. Is actually not that far anymore from, like some US indices. But you're right. Like on altcoins, I think the implied volatility is somewhere between 100 to 150. And the reason why is that, as I said, market makers are pricing an expected move or potential move on those assets. And as we all know, if you've been in crypto for a while, I think, like moves can be pretty wild on altcoins.
Yeah. And but do you see like sometimes when there is more liquidity, the IV can also go up, right? Because you're saying it's a function of the liquidity, right? Because IV can also go high if there is more, if the markets are more liquid, right? Which we have seen again, time and time again, right?
Yeah, that is true. That is true. It's not only a function of liquidity, it's a function of movement. So I think there is a second order function here in the sense that most of the time, the lower is the liquidity, the wilder can the move be. Nonetheless, it does not mean that a more liquid asset cannot move wildly as well. So what we were saying before is that, and that was completely different from TradeFi behaviors and sort of gold behaviors. What we were seeing like 2 or 3 years ago is that usually, like when market is down, when market is crashing, IV is exploding, right? That's usually because people, they start buying options. The more they buy options, the more the implied volatility goes up, right? In crypto, it was completely different. It's like when market was going up and BTC was going up, implied volatility was going up as well, which is normally counterintuitive because you would expect people to be less active in options as the market goes up. I think in crypto it was different, and one of the reasons for that is that it is like very much accelerated movements on the upside as well, not only on the downside. So the vol dynamic in crypto is very specific.
Yeah. And especially like the perpetuals, right? Like that must play a big role in IV because it's like you're obviously talking about 100x leverage, which is not the case in traditional finance.
Yeah, exactly. So because of the high amount of leverage in the market, when there is a move, either both sides, it can drive like it can imply volatility is usually can explode or can drive be driven up. So just not to mix, like there is implied volatility, there is realized volatility. So implied volatility is not always priced correctly. I think, like implied volatility on BTC now is somewhere around 35 to 40, but realized volatility is probably closer to 45, 50. So it's, it means that BTC over the last 3-4 months kind of tend to move more than it was priced in, right? So it's, the movement was bigger than the expected movement by the market and by the dealers.
Cool. All right. That's amazing. Just coming back to Coincall, right? So just wanted to, I guess, ask you both. So currently Coincall supports 17 underlying assets, right? So one of them is Kaspa, which we obviously will discuss a little bit more. So what was the like? How did you guys chose those 17 underlying assets, right? Like, if that number is correct, also, what is there a process that you go through to choose these altcoins?
It's primarily based on the trading volume, I would say, on the perp. So it's easier for market maker to hedge and everything. Yeah.
And I think, Junny, you can jump in here, right? The Kaspa, the option market on Coincall got started in December 2023, right? Were you involved in that? And obviously, how's that helped Kaspa, or sort of what's been your overall experience?
Sure. So I think this will be a question for Jimmy because I'll explain a little bit. I mean, I would love to say that KEF bring it to Coincall do a lot of things, but we never say so if we didn't actually do that. It's actually the fact that we were informed by the Coincall team, not by Jimmy actually. By then, we were told that Kaspa is one of the most traded option on Coincall, and we were very surprised, right? Because again, that I personally think that a lot of individual traders or customer fam, they don't necessarily use option to hedge anything. I think just it's quite uncommon for individual traders to think about hedging and think about making their trading activities as a strategy rather than just having a buy and sell button. I think those are the only two buttons on their keyboard a lot of times. Yeah, so we were actually the recipient side acknowledging that, oh, so somehow Kaspa is getting popular on Coincall. We don't actually know why. And then we say, hey, this is a good opportunity to let the community to know about hedging and know about options. So that's why I wrote a post about option myself, and the KEF and myself, we talked a little bit about option trading and Coincall. But yeah, why Kaspa is popular and how it gets popularity. I mean, there is a few marketing campaigns proposals that is being discussed between Coincall and KEF. But again, we haven't done anything yet. So I would say this is the question for Jamie, not for me. Yeah.
Jimmy, please.
Well, so I think look, one of the things I want to clarify is not really only about hedging, right? I think a lot of users that come here, they're interested in certain structured product or certain ways to generate some kind of return within a certain time period. And normally speaking, those return liquid altcoins are just way higher than what you can get from BTC and ETH, right? I believe that last year we had a pretty decent hype with Falcon as well. I think during a certain period of time, the price actually didn't go anywhere, but like it's very heavily traded on perp. A lot of people they're short, a lot of people they're long. In the end, I think we were able to sell some kind of structured product around Falcon within certain price range that has been pretty profitable for certain users. So that could also be a use case. It's not really just about hedging or shorting. It's more than that, right? It's more than that. Maybe Jeremy, you wanna add in some points here as well, yeah.
No, I agree with that. I still do think that hedging is quite important, especially for, like for Kaspa, because I think, like when you have a proof of work asset and, like I think that is kind of a natural interest. That's the same as you see for like BTC miners or so. They want to hedge like future expected returns or outputs in a way. So I think hedging is still kind of a big use case. But on top of that, I agree that structured products and like yield is the second point where like a few users or like, oh, quite interested. Oh, guys, can we generate, I don't know, like 7, 8%, 10%, 15%, 20%? And I think, like because the IV and volatility on Kaspa is a little bit higher than BTC or ETH or so, there is some different type of interest. So what I would say is that quantitatively speaking, in terms of volume, of course, when you say that there is a lot of demand, the demand is big on the Kaspa options. Of course, if you compare it to BTC options, it's smaller, quantitatively speaking. But I think qualitatively speaking, the interest is much more healthy in the sense that it looks a bit more like what I said before, the use cases of TradeFi, which being, like structured products, hedging, and those kind of natural interests on TradeFi options.
Yeah, so what sort of volumes do you see on Kaspa? On spot, you'll have 10 million. Perpetual, you'll have 50 million, 60 million current pricing, right? Around last week or so. What sort of notional volume we would see on your front on Kaspa?
I think volume is, I think that's the particularity of longer tail assets, that you cannot really expect a systematic constant volume on a weekly or monthly basis. It's not like BTC and ETH options. They constantly trade. They're like algorithmic trading desks trading these options. As I said before, is that because the nature of the flow is kind of depends more on the use case. You can have amounts where you see, for example, like a print of 25 million notional on an option, or like 25 is a bit a lot, but it happens. Or like 5 million or 10 million or something like that, or lower than that, 200K, 300K notional. And then like a week, 2 weeks, very, very quiet. So it's really, really hard to say what's the average volume on longer tail assets. I think it really depends on some particular interest. Let's take an example, right? So there's been a bunch of airdrops in the last 5-6 months whether a bit like Perpdexes, like Lighter, or like like even Hyperliquid a bit before, or like all those guys. And a lot of guys, they're receiving this airdrop, and they know that at a certain price they want to exit the market, right? So instead of selling right now, you're like, oh, maybe just when I said when Hyperliquid is at $40, right? So what you can do is that you can sell call options on Hyperliquid with a strike price of $40. So until it reaches $40, you steal all your bags. You get the premium because you're selling in options. And when it touches $40, you're happy. It reached the level where you want to sell and you got the premium in the meantime. So I think, yeah, that is it's not necessarily meme coins. I would say it's like new airdrops. New airdrops attract a lot of option interest usually. So whether be it for like exit price levels or for hedging new airdrop and portfolios, I guess.
That's a beautiful, beautiful example. I didn't think about airdrops, especially the wallets that receive big airdrops. They might want to hedge or they might want to exit at a certain point in time. That's a very beautiful use case, actually. From your perspective, Jimmy, there is a saying, right? Like options drive liquidity, right? How do you see that? Or how do you explain to people that the higher the volume of options, the more liquid the market becomes? How do you perhaps explain it to people that are rather new to the markets?
So I just want to make sure I get the question correctly. You mean like options drive liquidity, or like the more liquid on which side? Like
so options driving liquidity to the market, like asset, right? Let's assume BTC here, right? So I'm saying if there is more liquidity on options, do you see there's more liquidity being driven to that asset BTC?
Oh, I see what you're saying. Like there's options driving liquidity to the
Other way around, yes.
Okay, other way around. Yeah, I mean, look, I think from an institutional side, yes. Okay, because a lot of institutions they're just not interested in trading this linear product. I think we're seeing a lot of pretty big TradeFi shops. They're buying Bitcoin calls or call spreads or whatever, very simple structured products. 3-6 months later from now on. We've been seeing that since like last year. I think, yeah, I mean, from that perspective, yeah, I mean, those liquidity is, I think, yeah, being added to the system because of options. Yeah.
Because of options. And we've seen that in traditional markets, right? But yes, Jeremy, please.
Yeah, I think, I agree with that. And if I can just add very quickly is that I think it's sort of as well a chicken and egg problem in the sense that you need to have a certain level of base liquidity in order to launch options, right, on a given underlying. But once you have it, once you launch options and options start trading, you have a bunch of market makers that are quoting, making prices on these options, which means that they are accumulating positions on the side, and then they need to manage the delta, right? So managing the delta, meaning that they need to buy spots, they need to buy perps as well on the underlying in order to remain neutral on the position because they don't take a direction. And that delta is not fixed, right? There is then a bunch of gamma that you need to dynamically manage all the way along, right? So all this gamma managing, all this dynamic gamma hedging will drive some sort of volume and therefore as well liquidity derived from the option activity on the underlying asset.
Right. Beautiful. Yeah, that's typically what we've seen, at least in the traditional markets. But that's amazing. Now, Judy, would you want to ask guys any specific questions on your front? Because then I do have one wrap-up question after that.
Oh, I don't have anything special. Again, I think the reason why I want to invite them over, obviously, is not to advertise Coincall, especially that I know that XXIM is not a platform for advertisement. But again, I think the introduction of seeing your trading activities as a strategy rather than as a buy or sell behavior is a very, very important concept for the Kaspa community. All right, like you have to then think that it's not just about the price difference. It's about there's a reason why it's called P&L. It's not called how much money you make, how much money you lose. It's because for each strategy there is a different P&L source. I do understand that this is not for everyone, right? Like it might be complicated. Sometimes you don't want to spend time on learning about these concepts, but I hope that's kind of more or less alleviates the anxieties of the Kaspa fam a little bit, more or less. And especially for, when Jimmy and Jeremy talks about institutes, for instance, big market makers, if they're having a large position, it's unlikely the case that they are just going to sell it or, make a wild decision towards a certain direction. Again, that is not their strategy, and that makes them very vulnerable to attacks. So that's basically from my side. Again, I don't have anything special. I think it already covers a lot of topics. So yeah, you can give your wrap up question, and I think that's almost it.
Yeah, no, thank you. I think it's been great. And as like, I guess the thing for us was we wanted to have the guys over to really kickstart this discussion, because I haven't personally seen a lot of crypto option discussions on the YouTube, on other platforms, right? So I think it's a great session to start people thinking in that direction. And we, specifically didn't want to go into discussing, a lot of a lot of Greeks and a lot of like strategies specifically. We wanted to keep it high level to get people, consume, and then perhaps come back to it. We can have perhaps another session when everyone's free. But let me ask you guys this last question, perhaps a wrap-up question, right? Where do you guys see altcoin option market in next 3 to 5 years, right?
Well, to be honest, it's very hard to predict that. But I think from a market penetration perspective, you're looking at another 3x at least, I will say. And one thing I want to say about options is quite interesting too. If you look at the data that Deribit had back in 2022, where when the market gets into a deep bear market for a couple of months, it doesn't mean price actually went down that much. It probably means like price has been down and boring for a couple of months. If you look at 2022, from June to like all the way to December, I would say, or even the early 2023 time period, where all the Delta One product, like Perp and Spot, the trading volume were down like 80-90%. They were actually growing. Like the volume didn't drop at all for options. So look, we don't know what's gonna happen this year. Like,
sorry, Jimmy, why didn't it drop? Why do you think it didn't drop?
I think one of the two reasons, right? One is that the market has been just generally growing. Okay, so when you have your sector growing, I think that offsets a little bit. But I think the major reason was that it's just like traders who are trading options. I think they're a little different than people who are just aping into perps, right? We really was trading the volume, not spot. So when the market has been like down and boring and volatility has been killed, still a lot of options trader would be selling vol, or they would be like, I don't know, buying like longer term tenors and stuff like that. But like, whereas for perp, like you don't have much to do, right? Because like long or short, you're paying the funding fees, the price action is not moving, and you're not making any return. So look, this is all hypothesis right now. Like I don't have like the exact math breakdown for that, but that was the fact, right? And that was my guess. So I don't know what's gonna happen this year, but I do think over time the market is gonna grow. Right now 2 to 3%. I would say a couple of years later you're looking at probably 10% ish. So that's another 3 to 4x. It's pretty decent, yeah.
Yeah, cool, awesome. What about you, Jeremy?
Yeah, pretty much agree with everything, to be honest. So yeah, option market has been resilient. I think there is the good thing and the beauty of option is that there is a way to express a view and to generate return, whatever the market you're in. And that is the main difference with perps. So even in a boring market or like a bear market or so, or in a range market, you can still generate money by trading options, which is much more difficult with perps, I guess. So options are resilient. I think, like the offering is growing. New people are coming in. So I do see the market growing in the next few years. To what extent, I don't know. We are not predicting the future, but I think it's obvious that it's going to grow and that there is still room for that.